Hey, what's up, everybody? This is Evan Carthy from evancarthy.com. Today we are looking at the weekly preview slash review of the S&P 500, the E-mini futures. We're going to go over a little bit last week, some trades that got completed, and setups to look for next week. So the big news in what I was looking for last week is this setup right here, this 76.4 long, was complete. You see it came up and hit it late last week towards the end of the week, and it is now, excuse me, let me move this, actually I believe it's up there, yeah, it's right there. So it is now complete. Now you can see price came up late last week, ticked it, and then ended up going through it. So I'm gonna go ahead and take that off of there since we don't need that on there anymore. But we've been looking at for literally about a month now, and it finally came up. So, and you can see it also created a good support zone, good resistance level going around there plenty of times before it finally broke out there and hit it. So I just find it really interesting that that one got complete. And one thing we need to look at is there's a 76.4% short over here. You can see price hit 76.4, initiated it, hit the 100, never came back and hit the 76.4 to exit it. So this is a trade that is live, and this is why my bias now for the S&P 500, the E-mini futures, is definitely to the downside. I haven't put the trend line on here because one of the things I like to see about is when the trend line breaks, because typically a lot of times that signals there's weakness in it. We can expect some impeding downside to the market. So you see it broke, kind of use it as a little bit of a support, but not, or excuse me, the 100% use as support. Now it's retraced back up, which happens plenty of time, and this doesn't have to mean that it's going to be a pure resistance level, but I just find it very interesting that the end of this week, it is perfectly back on the other side of the trend line, treating it right now as resistance level. So it's definitely something to watch for on the market here in the upcoming week. In the post that this is going to be under on evancarthy.com for the S&P 500 futures, I linked a CNBC article on there because they're saying that the markets expect it to go up next week, and I disagree with that. I think if it does go up early in the week, it's just going to be a false setup for the big banks and institutions positioning themselves so they can get out of the market to, and they can get short and get out of any of the longs that they're in. So, because just one thing is that I'm not saying I don't trust CNBC, but I just think there's so much money going in right there. There's no reason for them to just give opinions about where the market is going. And not saying that conspiracy theory or anything like that, but I just try to do the opposite of what the news is saying, because all that stuff that they're pushing out there is all yesterday's news. And the people who are making all the billions of dollars out there, they're already like 10. They're already a step ahead of any of the news out there. And so I just think a lot of stuff gets reported out there is to get people like me, for instance, on the wrong side, believing it's one way, which is where I really don't pay attention to the news. But I do notice it, just see what the trends are based upon the market, and pretty much from what they're saying, do the opposite. And I've been doing all right from that. So I think it's interesting. It's hitting off that, and since it's hitting off that line, it broke the trend line, hitting that resistance. We saw the 76.4% short on the daily time frame, because this SP 500 E-mini futures contract, this is continuous, so it doesn't end every quarter. You can see it here; it just keeps going and going and going. And obviously, you can't trade off here, but it's just good to know when you're looking for market direction and setups. That I think we're going to come to the downside here sooner and later, and the X we're looking for is around here, around 2704, 2703.50, 2705. You like round numbers? Excuse me. So that's why I think that there's just going to be some more downside here in the market coming. Now, could it come up and make fresh new highs for going off? Sure, it for sure can. I'm not saying it's 100% guaranteed going down next week, but I'm more on the side of being short than I am being long here for the S&P 500 until about 2705 comes down here and gets hit. And also, we are also in, or fixing to be in another, no, excuse me, we are in another short setup right here. So in the 15-minute time frame, this is another 76.4% short. You see price come up here 76.4, never hit the 50, hit the no, excuse me, went up, hit the 100, never came back and hit the 76.4. Then it went up there, hit the 2.618, has never hit the 100, and that's the last time we're going to move the exit for it. So you can see it's kind of using 4.236, a little bit of a resistance level or area for it. and also bouncing off that longer term trend line that I mentioned just a second ago. And so the X we're looking for here for this move is down here about 2935.25, so 2936-ish, something like that. For it is right here. So that's another short step that we have. Probably if I went through here, there may be another long step, but you can see the trend has been pretty much straight to the upside right here. And then using this trend line right here, you can also see how price broke out of here and now just been holding steady right here. So this is another reason why another indicator from this setup that I'm expecting more short from the S&P 500 here next week is that, as you can see, the longs are gone, the shorts are here because price has pretty much been going up ever since last week. Let's see what date that was. Ever since about the 4th, middle of the 3rd to the 4th last week, prices took off. So from about 28.96 all the way to 29.86 or something like that, 100 points for it. So that's why I'm looking for a sell-off to happen sooner rather than later in the S&P 500. Not saying the market's going to collapse or anything like that, but these pullbacks are healthy. It's natural. It's supposed to happen, and which is why I disagree with the CNBC article that, again, I have linked on my website. Talk about it here for a second. Not a bad article. It's just I disagree that the market's going to keep on going up. I think there's going to be a pullback for it. So if we look at the September contracts here and also put the December contract here, because in about a week or so I'm going to switch over and start looking for setups for the S&P 500 mini futures on the December rather than September, since we have, more weeks do we have left on it? We have about 2 weeks left on it. It's definitely the last week of the, starting Sunday the 15th. I'll definitely move all my anything from the September over to the December as far as looking for trade setups. But let's see right here. And okay, we also are looking for here's the September contracts right here for the S&P 500 E-mini futures. We're also looking for a 8.23% short trade. So what happens is, actually I can get rid of that on there anymore, 2.618. So when price hits the negative, in fact I'm going to get rid of that right there. Let's see here. I would just leave it, who cares? So when price goes up here and hits the negative 8.236 Fibonacci extension level, or 8.236, this is reverse sides, so you have to use the reverse Fibonacci level. So actually you add another 1 to it, or subtract another 1, so it's actually 8.236 at 2998.75. That will start a trade, and the exit down here will be at the negative 4.236 level at around 29.34. and that'll be that exit. But if price blows through it and goes all the way up to 3,300, then the exit moves down here to 2998.75, and that's the last time you move it. So I personally don't think price is going to do that. I think if it does come up, or when it does, I mean eventually will come up and hit 29.2875, then the exit will be down here, and I really don't think you have to worry about price going up to hitting 3,300. But it's just interesting to note that if price does go up like that CNBC article says, it makes a new high. It needs to go about 2% higher to do it. It's interesting that it's around this level right here as well. So just another thing to keep in mind for it. And then see, one of the reasons why I'm not a huge fan of trend lines is, okay, well, how do you do it? Do you do it like that? Oh, well, look, it broke right there, came back down. Oh, broke there, broke there, broke there. Oh, it broke there, didn't come back down. So plenty of times you get plenty of trend line breaks, and you know it's not really sure where it's going right there. But again, that is another short trade that we have for right there. If we use the shift pitchfork, you can see how price broke out, came back down, broke back out. So now it is on the other side of the shift pitchfork. And typically what happens when price breaks out of it, you can expect a movement back down to the other side of the shift pitchfork. You see it did it right here. That's above right here. It doesn't always happen immediately. It can go way off out of the way right there, which is the one reason why I haven't figured out a way how to create a trade off of this right here. But just interesting to note, again, how it's broken out at the top. So if I have to make, well, one thing I try to do with these videos and all my trades is gives precise entries and exits, and also no hedging. Hey, if I'm wrong, the market's going, I'm wrong. It is what it is, but I'm based upon what I've seen, where I think the market's going. So what I think is going to happen next week, this is my no hedge S&P 500 prediction for the week of what's tomorrow, September 8, 2019. I think the market does open higher. It does go up, hit the 2998.75. How much higher it goes than that, I'm not sure, but I think it does. Then I think we start getting the retracement here sometime next week, with the exit for this one being about 29.35, and then going over to the chart over here. Then you have this exit we're looking for at about 29.35ish over there for that one, because let's see, what was that last one I just said? Yeah, wow, that's really interesting. Both those exits are around the same right there, 29.35, 29.36. And then you have, so I mean, that's two short different trade setups that I use that have come to pretty much the same exit within a point of each other. That's pretty cool. And then you have this longer term exit down here, 27.05 for this short trade. Now, I'm not saying next week market's going to go down that level, but that's what I'm saying. Be very careful out there, because I think there's downside coming, and I put way more weight on the downside of the market than it continuing to keep on moving up before this comes back here and gets complete. So anyways, hope that helped. As you can tell, I'm definitely here in the short to midterm. I'm definitely bearish on the market rather than bullish. But as soon as these shorts get set up, then I'll probably switch around and be more bullish, because that's going to create a lot more buying opportunities. Right now, since price has pretty much been going up, that's why I've been creating all these short opportunities. So no big deal, just the way the market goes. Just got to trade the way it's going and what it is giving us. So anyways, hope that it helped. Great, have some good trades out there next week. I'll talk to you soon. Thanks, bye.